Hello, and on this lovely morning, we have some Bitcoin news for you. We have some final pre-ETF announcements by Fidelity and Galaxy showing that Bitcoin ETFs are on the way. And yes, they are going to be approved very, very soon, perhaps tomorrow, perhaps the next day. And what they did was they announced the fees for proposed Bitcoin ETFs. So these are the fees that you have to pay if you want to buy a Bitcoin ETF from Fidelity or Galaxy. So Fidelity will charge 0.39% to shareholders of its spot Bitcoin ETF, and Galaxy will waive fees for 6 months before charging 0.59. These are generally management fees for funds. So everyone is getting everything together, like how much they're going to charge, seeding and all this stuff, before January 10th, because everyone knows that the ETF will actually be approved. So from Eric Balchunas, Invesco Galaxy is in, and here's a whopper. It will be waiving fee for the first 6 months and for the first $5 billion in assets. AP named as well, Virtual and JP Morgan again, and another horse in. Are we having fun yet? So essentially, the big dogs like JP Morgan and others, they're coming in. Everyone knows it's getting approved. All the big guys want this actually approved. And you might want to be in that first $5 billion in assets because then you will get your fee waived, at least for the first 6 months. So there's a great opportunity for people to jump in. So I think like at least, a couple $1 billion will actually be flowing in fairly quickly to Invesco Galaxy. They obviously think it's going to be more than just a couple $100 million that are going to be flowing into this ETF. Jane Street will also be an authorized participant. Jane Street is the famous or infamous former employer of the mighty SBF. And of course, there'll be an authorized participant for the Bitcoin ETFs Fidelity, WisdomTree, Valkyrie, implying that Jane Street Capital will be allowed to arbitrage differences in price between these funds' shares and Bitcoin itself. So they're going to maybe making some arbitrage money. Obviously, they're all going to use a cash model. But the main thing is Fidelity and Galaxy have actually announced fees, which means they're getting their last ducks in a row for this ETF to actually come through. So I think all these people thinking that Gary Gensler is suddenly going to rug pull us and not have an ETF go through, I think those are kind of out the window. And of course, Bitcoin on this looks like the data is saying it's targeting 48K. Now, we might have a bounce back at 48K. We might have a drawdown at 48K, but that will not be the final price. I think the final price will be a lot higher than 48K. So, you might want to sell at 48K, wait for the drawdown, and then buy back again, maybe at 45 or so. But I actually think I'm just going to hold through. And realistically, I think I'm going to do just fine. I might suffer a little bit of a retrace, but we'll go past 50 in no time at all. SEI, people have been talking about this a lot, is actually gaining traction. What SEI is, it is a layer 1 that's EVM compliant and has a parallelization process. And of course, the network's token has gained 75% over the last week. But that's not the biggest gainer. So the biggest gainer is actually a meme coin again. And would I buy this meme coin right now? I don't actually know. I would probably have to take a little deeper look at it. But in case you're wondering what this meme coin is, it's called Seiyan, S-E-I-Y-A-N, of course referring to Dragon Ball Z. And Seiyan has gone Super Saiyan because it has gone up 400% in the past week. And of course, that is a proxy for the growth of the broader SEI system. So if you see in the future a layer 1 that's going to grow massively, you want to see if that layer 1 has any upcoming meme coins, and you want to buy those meme coins off the dexes because those meme coins are probably about to go Super Saiyan. That is the new pattern that's actually emerging right now. If you have a meme coin on an L1, if that L1 goes up, especially on an L1 that was previously not that well known, if that L1 goes up, that meme coin is going to go up. Now, this Seiyan coin, obviously, people were going to find hard to find because it did rise just over New Year's weekend, and everyone was basically off, and they weren't actually watching their tickers. So obviously, SEI is doing very well. Seiyan might continue going up. It depends on the price of SEI itself. Obviously, it depends. These coins depend on their parent networks, mainly because they depend on them for liquidity. These coins like Cyan do not actually have fiat pairs on many big exchanges or any big exchanges. So you have to go through the DEXs to actually get them. A couple of exchanges like MEXC might actually have them, but I don't know if MEXC is actually available in the United States and other jurisdictions. Obviously, EVM-based layer ones are going to have a jump because people want to develop Ethereum on these chains because Ethereum is severely slow. And of course, that's going to bring in a lot of liquidity and a lot of money to these networks. So these meme coins are definitely going to get the jump on other meme coins. So the thing is, yeah, that's like something you want to look for. Look for L1s that aren't that big right now, but could actually come up. And you can tell like which ones might come up just by going around into crypto chats, seeing which ones people are actually talking about, and following Twitter trends, going on to Telegram, Discord, and those kind of communities, seeing like which L1s, small L1s people are mentioning the most, and seeing if they have any meme coins on those L1s. I mean, it's a lot of work, but if you want to make a lot of money, a lot of work is actually involved, and you're always taking a risk with the meme coins. But this is one of the few ways you're actually going to find these meme coins before everyone else does. If you have to stay vigilant on Discord, Telegram, Twitter, and all these social media networks and see which ones are trending. Unless you are the creator of the meme coin, then of course it's coming. But that's another story for another time. There is a warning about the Mickey Mouse NFTs. For those of you that know, the first design of Mickey Mouse, the copyright expired, and now on OpenSea, the Mickey Mouse NFTs are selling like hotcakes. But you cannot just make Mickey Mouse products right now. Mickey overall is still copyrighted by Disney. It's just the first design that the copyright expired on. That's right, the first design, it's kind of like iconic, but the colored in designs, the later like 3D designs, those did not expire on copyright. It's that first initial design. So lawyers are warning you that you will still get sued by Disney if you actually just go around making Mickey Mouse products. So you cannot suddenly make your own Mickey Mouse products. Lawyer Oscar Franklin Tan told Cointelegraph that people cannot use Steamboat Willie's version of Mickey to make anyone think their work is affiliated with Disney. So you can actually use the Mickey Mouse icon, but you can't actually call it Mickey Mouse because the name Mickey Mouse is still copyrighted by Disney. So the thing is, like, the Steamboat Willie version of Mickey Mouse is the earliest one, and that's the black and white colored one. But on January 2nd, non-fungible tokens using a version of Mickey Mouse that appeared in the Steamboat Willie short film in 1928 made it to trending collections of the NFT marketplace OpenSea. They will soon be worthless, maybe except for the first ones that actually just came out. It is the Steamboat Willie that just became public domain. It is not actually Mickey Mouse that became public domain. Only the specific 1928 depiction of Mickey Mouse, the scarier black and white color, with a white character with longer nose and no gloves is public domain under U.S. law. Mickey Mouse, the trademark and brand separate from the character, is still private. You cannot suddenly make your own Mickey Mouse products. So please, guys, do not make the mistake thinking that you can use Mickey Mouse in any way you want, because if you do, Disney will come to your house and do bad things to you, because Mickey Mouse is still their property. And it's only the Steamboat Willie version that is public domain, and you can make NFTs and stuff out of it. And of course, Bitcoin has defeated Jim Cramer. Yes, we capped Capo this year. Crypto savvy, we proved wasn't so savvy after all. But Jim Cramer, the big 900-pound gorilla in the room, has been defeated. And he has finally said that Bitcoin is here to stay, and it's a technological marvel. And obviously Cramer was bearish on Bitcoin several months ago, but Cramer is wrong like 80% of the time. So there's a great inverse Cramer fund if you guys are interested in that. But he has finally thrown in the towel on Bitcoin. Of course, since Bitcoin's hit above 45,000. The thing is, you can't kill it, he said. Bitcoin is a technological marvel, and I think people need to start recognizing it's here to stay. Looking at you, Jamie Dimon and Gary Gensler. Cramer also took note of another famous Bitcoin skeptic, saying the late Charlie Munger was blind to this. Of course, Charlie Munger and Warren Buffett are like a million years old. They grew up in the time of the dinosaurs. And because they grew up in the time of the dinosaurs, they're not very good with technology. They barely can use stone tools. So this technology with cryptocurrency, not really a thing to them. They never really bothered to learn it. And they're obviously stuck in stuff like gold, which isn't bad, but not does not have the potential for growth like cryptocurrency. So another big crypto critic that is kind of schizophrenic and has changed his opinion several times on crypto has finally thrown in the towel. And Jim Cramer has finally said crypto is here to stay and that you cannot kill it. And remember, even when he was criticizing crypto, Jim Cramer made a lot of money in cryptocurrency over the time that he was critical. So these guys are like, do as I say, don't do as I do type of people. And those type of people you should not actually listen to and should not take crypto advice from. I mean, you should always do your own research in crypto, but be wary of what the Wall Street bigwigs say and look at what they do. They're all going for the ETF. They all want in on the industry. So you know there's money to be made in the industry. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.